moving on. It's consolidation time in India's startup ecosystem. And while some startups are being bought over for a specialized vertical play, several others are on the block because of flawed business models and the inability to secure more funding. However, Japanese internet conglomerate Softbank Corp seems to be bullish on Indian assets. Here is Adith Charlie with the latest edition of the CNBC TV 18 Young Turks deal tracker.
Despite a slowdown in growth, Softbank continues to bank on Oyo Rooms, Ola and Snapdeal. In its earnings presentation, Softbank said that budget hotels aggregator Oyo Rooms has hit unit profitability at an aggregate level. Oyo CEO Ritesh Agrawal said that the company grew 15-fold year-on-year with 2.3 million booked room night transactions in the fourth quarter alone. However, the growth engine seems to have slowed down a bit for online marketplace Snapdeal, which is Softbank's big bet in the Indian e-commerce landscape. Snapdeal's gross merchandise value grew 90% in the year ended March 2016, as against the 301% growth recorded in 2015. Be that as it may, Softbank is not tweaking its India investment plans, which are slated to grow from the current $2 billion to $10 billion. Another company that likes the inorganic route is classifieds platform Quikr. After buying online reality portal Common Floor earlier this year, Quikr has now acquired in-house beauty services startup Celosa. The deal is part of Quikr's strategy of investing about 250 crore rupees in its home services vertical. Speaking of acquisitions, a unit of financial services firm JM Financial has agreed to buy 9.84% stake in peer-to-peer lending marketplace Faircent. Now, P2P lending companies essentially bring individual borrowers and lenders for loan transactions. As you may recall, just a month ago, the Reserve Bank of India proposed bringing P2P lending ventures under its regulatory purview. More on the consolidation theme then, we learn that food ordering platform Tiny Owl is likely to merge with on-demand logistics services startup Roadrunner in an all-stock deal. The deal will create a new consumer-facing product, Runner, which will enable the combined entity to take on food delivery platforms such as Swiggy and Zomato order. But experts believe that what this deal really indicates is that startups which do not have a preset path to profitability are in for some tough times. But here is a startup that does not seem to be facing any trouble when it comes to future growth prospects. Fitness startup Healthify Me has backed Series A funding of $6 million from IDG Ventures, Inventus Capital and Bloom Ventures. And what's more, this comes just a year after the startup raised seed funding from handset maker Micromax and a bunch of angel investors. Well, that brings us to the end of this edition of the CNBC TV 18 Young Turks Deal Tracker. Till next time, good night.
With that, it's a